Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Cardano, taking a look at the recent price action of ADA and what I think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button, I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Alright guys, let's get right down into this. Cardano paired up with USDT on the hourly chart and Binance is the data source. There are actually two different possibilities of what's going on right now. A bearish one and a bullish one, unfortunately. It's going to be a little bit difficult to know exactly which one is going to play out, but I'm going to give you both kind of scenarios and then I'll leave it to you guys as to decide where you kind of sit on that spectrum of bullishness or bearishness. Now, here we do have this kind of fifth wave expectation, okay? And we actually mapped this out quite a bit in the last video where we were going 1, 2, kind of 3, looking for 4, then going up in 5 and so forth, right? Now, there is a concern with this particular wick here, okay? The only possibility that remains because of that is going to be 1, 2, 3, 4, and up here in 5, right? We can't have all those other nested ones. They would have invalidated, right? Because there isn't a good 5-wave count in here, for example. We can't see it. It'd be about here with this little bit, then up like that, and so forth. And then you'd have another little one inside there. So it's not perfect by any stretch of the imagination. Okay, so this is the bullish kind of scenario. Now, in order for this scenario to be kind of valid, we have to then consider this fifth wave an ending diagonal structure, okay, and it would be made up of 3 waves, okay, so we'd have this kind of A, B, kind of C structure here. We'd have to come on down in an A, B, and C structure, but not cross lower than our lows, which if I go ahead and mark up just here, would be 33.2, so we wouldn't be allowed to go down lower than that. Then we'd go up in 3 again, so we go another kind of A, B, C structure like this. This would then be followed up by another kind of 3-wave structure coming down, okay, would overlap with the first one, and then we'd finish this off with typically another kind of 3-wave structure, and this would be an ending diagonal, okay, and it would take us higher. Okay, so this is the bullish kind of scenario, and you can kind of see this would be a 1, 2, 3, 4 kind of 5 job, okay. Now, this one, I think it's possible. It's definitely possible. It's there. We can see it. But obviously does have some clear invalidations and all that kind of stuff. So, for example, we wouldn't want to see us cross this red line here at 33.2. That would create an invalidation. Okay, now the bearish scenario. The bearish scenario is that we're in a corrective structure. Okay, and we're probably going to, if this were to kind of play out, invalidate the 5-wave structure upwards, and meaning that this here is in fact the top of our 5th wave. Okay, now this scenario would be coming down here into an A, up here is a B, and we come down here into a C. Okay, now for that, I'll give you the target because this one we can actually do a target on, whereas the ending diagonal we don't, not yet anyway. This one would be targeting down here at 32.69. Okay, but could go down to 31.88 in that kind of range right in here. So I'll go ahead and just throw that up. So that for me is where we would kind of be looking at this kind of area. Now, if we throw this across and just roll it across here, we can kind of see this is an area of previous kind of resistance that turned into support. And you can see here, this could be an area that we find support as we kind of think about, you know, maybe moving back up from here. Bear this in mind that this is only one of 2 possible scenarios, right? So we have that bullish one, which was basically your ending diagonal, taking us higher. And then we have this bearish one here, which would actually create an invalidation of those highs coming up here. And all of that one there would be removed. And our 5th wave high remains up inside our little box here at 35.61 to 37.3, the expectations of this 5th wave, which you can get by measuring this wave 4. You can kind of see it right in here, the 1.236 to the 1.618, okay? So all of that is kind of lined up quite nicely. So yeah, we'll see. Obviously, Monday morning comes around, we see a bit of red in the market. We have, of course, seen all of this liquidity getting grabbed right here because there was a lot of long positions getting wiped out. There isn't terribly too much to the upside here. it's actually stacked up quite higher on the price chart, whereas realistically, we've kind of got a nice even spread of long positions that could be liquidated all the way down towards 23 cent. So it's going to be interesting to kind of see how that kind of plays out. Now, if I scale this up into our daily charts, we can kind of see we are still below our 200 EMA. We are, up in this B wave. We haven't pierced up above 44 cent, 44 cent being our kind of area where we would invalidate our low points on this one, this being just corrective. So interesting to see how this is going to play out. Now, one of the biggest things that's probably worth noting is we are overbought on our daily chart quite a bit. We have been overbought for quite some time here, with the other time frames kind of resetting themselves. It's interesting. But the biggest interesting thing really comes from our weekly chart. Our weekly chart is now almost back up in that overbought area. This is not a good sign. Okay, so last time we were up in this overbought area, we were up here at about 52 cent. The time before that, we were up here at 58 cent. The time before that, way up here at $1.26. So just bear in mind that what we're doing here is we're setting ourselves up to fail, because we're setting ourselves up with these lower highs. Let me draw a trend line on here just to kind of illustrate this. Okay, trend line. And actually what's interesting about this trend line, and you'll need to put your charts on logarithmic if you haven't done so already. Let me go grab a circle here. So we obviously here on this one, we have this one. We tested right up here, and we're testing right now here. Okay, so this trend line, although I'm not a big fan of trend lines because it is subjective to where the analyst draws it, you can see was first tested in August 2021, then we tested it again in November 2021, tested again in April 2022, and we're testing right now here on the 16th of January 2023. Okay, so are we going to break on through it? We are below the 200 EMA, so it's bearish, and the structure isn't looking great right now. So it'd be interesting to kind of see how it plays out. Now, in terms of momentum, we actually do have momentum to the upside, so we could pierce this trend line, but I wouldn't want to get too confident about that. I think trend lines, like I said, they can just be adjusted, and you can get different points of view. For example, if I draw a trend line from here instead, actually we can go up higher right before we get rejected and so forth, right? So it really does depend on where the person draws the lines. So I would say that we've probably got a little while yet before we do see major pullbacks, but there is something brewing here for Cardano's ADA. So I'm not concerned. Obviously, these are my thoughts and opinions, right? And, sometimes people don't want to be bullish, and sometimes people don't want to be bearish, right? That's perfectly fine. I'm happy on either scenario. If I'm wrong, I'm okay with that, right? But the question is, if you're wrong and you're thinking we're going to the moon, are you okay with that? Essentially, what I'm looking for is I'm looking for a trend to the upside. I don't see it yet. I'm looking for that trend, and then I'm going to be buying the retracement that happens afterwards. So it's always a retracement. You do not move in straight lines. Even if you reflect on where things were previously, there's always retracements. So if a bear market bottom for Bitcoin came in over here, right, during December 2018, right, everyone's getting themselves all carried away thinking they're going to the moon, yet still we came down really low. And this was just the COVID crash. Before then, we were actually up here, and this would have been a fantastic place to be dollar cost averaging into ADA, right? Not the way before, COVID nonsense. This was actually December of 2019, right before all of the pandemic and stuff like that. This was still a retracement after this move. It wasn't a new lower low, but it got very, very close to it. You can see it right in there. So we don't want to get too carried away thinking that we're going to miss an opportunity here, because you can always come back in on the next retracement and buy back, but this time you're buying into the confirmation of a trend to the upside rather than hoping that it's a trend to the upside and buying into that. You can actually sit back, wait, relax, wait to see if it is a trend, and then buy the retracement that forms after the trend, and you're going to get very, very close to the bottom without any of that fear that you're going to be kind of trapped out or anything like that. So just kind of keep these things in mind. Like, for the most part, I'm not expecting us to go straight to the moon. We're nice and high on our stochastic RSI on the weekly time frame. Check out the daily RSI. You can see we're way up here looking for this retracement. This is incredibly bearish, and this is consistent pretty much across most platforms here. We're going down in these, so we've got higher or lower highs on the price and a higher high on the stochastic RSI. So we've got the bearish divergence on the stochastic RSI. Throw in the volume here. You can kind of see that the volumes, they're not overly impressive in comparison to where the history is on this daily chart either. So on the smaller time frame, yeah, you got some kind of, volume increase. But on the bigger macro, you got a volume decrease, right? And so there's not terribly too much to get excited about, I don't think. But, we'll see how it kind of goes and plot it out accordingly, what the data suggests to us. At the moment, I think we've got, in my mind, I think it's more likely that we go down on this daily chart than we do go up, in my personal opinion. That's kind of what I'm thinking is going to occur here. So it'll be interesting to kind of see how that plays out. Like I said, we do have that possibility of getting that ending diagonal, moving on up a little bit higher. But I think actually we're probably going to come down, create invalidations, which wouldn't necessarily even be an invalidation because it could just be it could even be a bigger ending diagonal structure. But we'll see how it kind of plays out. Like at the end of the day, I'm just going to go through the data, what the data suggests to me. And at the moment, the data is suggesting to me that we should be aiming between 31.8 and 32.6 for the next kind of move on ADA. If you found this useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe. Don't forget to join us down in Discord, guys. Until the next one, have a fantastic day.